Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, all sorts of chaos overnight with the Bank of Japan doing exactly what it said it was going to do. No, but the thing is that the markets were expecting the Japanese to relent, and instead they said, no, we're okay. We're keeping their policy the way that it is. And that upset a lot of bets that people were making. And the result has been higher markets and lower yields, which is kind of like, what? How can this continue on? I don't know. The world is just all sorts of screwed up. Something's going to have to give here. So come over here. Okay. Like the S&P 500 is doing, it's doing okay. It's doing okay. All right. It's not as high as it could be. Hasn't beat its heights from December, but we're over 4,000. Over 4,000 is not that bad. And then, but you know, the treasuries, they're up too. You know, and like, how low can rates get before it's like a problem for inflation to come back and that sort of thing? I just don't see the current mixture of how much things cost lasting for very long. But I also don't know how it like all comes back into, because you know, this side could come in or this side could come in, and it's probably really complicated as they all move it. So we just have to be on our toes. All right. Looking at the other assets here, oil continuing to do good. So that does kind of suggest to me that the future oil demand in the economy is looking okay. Natural gas continues to go down. So we're really concerned about gas prices, both in Europe and in the United States at some points. But here, mid-January, it's looking not so bad. So that's good. Gold and silver really running here after the Bank of Japan news. And copper, man, I need some copper, man. I was like, oh, let's put some copper in our portfolio. What? Now I feel like I'm chasing. Might not be too late to go get some Freeport McMoran or something. I don't know. I'll have to look at that today after the stream. All right. Here's the dollar. So the dollar initially went higher before coming back like really hard. So that is all like really bizarre in my opinion. And Bitcoin still about where it was. All right, so we should show the Japanese yen too, just so we can see. Look at that. So that was when they thought, oh, okay, there's gonna be some change to yield curve control. Oh, nope, there's not. Well, that's really bad. But it's recovering. It's recovering. So, but that just has the markets in all sorts of weird places, man. To show it in the treasuries, like that's a good move up, right? Mostly sideways since then, though. Interesting. So, with all of that, I think that there could be some opportunities today. There's probably going to be just like some volatility in general. Which direction this goes, though, I'm not entirely sure. I suspect lower, but we're already at 3.46. Like, really? Okay, 3.45 today, probably. I don't know, guys. Let's see here. Uzi, Ninja Trader margins up 4x just for PPI. Curious what that says about PPI. Well, didn't Ninja Trader put the thing out that like the margins are increased for like all economic news now, and like they just up. It was, I think it was them or AMP the margins are just higher for the retail traders. And you know what? It's fine. I've always kind of been like, why not just require them to hold the maintenance margin, even if it's day trading? Because by giving them the intraday margin, all you're doing is helping them blow up their accounts, right? You're right that we got PPI here coming up here in a moment. US PPI, core PPI, month over month. They're looking for a reading of spot 1. We also, though, probably even more important, actually, you know what, Uzi? It's probably retail sales. So core retail sales month over month, they're looking for a reading of negative spot 5. That's probably more important to the market than PPI. That's why I never noticed, because yeah, that's interesting. They've been changing the margins. I don't read the emails because I'm with Edge Clear now and it doesn't apply to me. But okay, so here's the poll. Yeah, it's really pulling. And we're higher. And I'm seeing US PPI month over month is negative 0.5. And US retail sales month over month is negative 1.1 versus an expected negative 0.9. Where's my core? I still don't have the core reading, but it must be more than expected. Interesting. I never changed this one to... Can I show you something really cool? I have to change the color on it though to really make it look like truly cool. There we go. Here's this little chart I've been working on for somebody that I'm going to... I'm not going to give his exact calculations, but I will make a a chart similar to that that's available to everybody, and I think it looks super cool. Doesn't that look super cool? Oh, you better look quick. 5, 4, 3, 2, 1. Well, now you're just gonna have to go back and look on rewind if you didn't see it. Well, look at that bid at 13. Wow. Wait, what? Okay, so when I see a stack like that after news, I'm usually like, oh, let's go with it. But in this situation, I'm like really wary of that. Like, why would they stack that? They traded it. They sold it. Let's just see how that goes. That price, let's just mark it with an X here. That could trip up markets for a little bit. Yeah, if your bids stand a good chance of getting filled. So a little bit too much all at once after a big jump already, kind of really high probability of creating a liquidity hole. Oh wait, here's our chance, right? Here's our chance. Try and take the one tick. Kill me. See, this is the problem with the trade, is you sit there waiting for the fill. And if it doesn't work out, then I'm like down like 4 ticks and I'm pissed, right? No. Why not? I feel like gambling today. The S&P 500 is turning down. So this might be, so I've seen this discussed many times, more particularly with jobs and CPI, but they've been saying that, you know, like a number that's too weak, like a weak number, yeah, good for stocks, but a really, really weak number, bad for stocks. And maybe that's what's happening right here. So did we get the US core retail sales number here? US core retail sales, they were expecting a reading of -0.5 and they got a reading of -1.1. So almost double what the market was anticipating. Almost double the amount of decrease in retail sales that the market was expecting. So that very well could be that situation, which is that the retail sales look so weak that now the equities are starting to price in recession rather than, oh, with free money, it's going to be great, right? Okay, so the little iceberg there at 11, that maybe helps me. Yup. Come on. Come on. Thank you. I don't know if it's going to trade 13 again. I'm going to leave that there just to see if the point that, you know, there was a big order there and that likely becomes a point of control and gets visited again and all that stuff holds. We'll see, but I'm not feeling too good about it at the moment because it keeps going down. I feel like for this trade that long treasuries makes more sense than trying to play the equities, because what this means for treasuries is very clear. And the only issue with the treasuries is the current pricing is 3.4 too low? Well, maybe it is. I kind of feel like maybe it is, but I bet Powell will still hike 0.5 next meeting saying, well, jobs are still strong. I'm not so sure about that one, Kyle, because I mean, we haven't heard anything from. Okay, so finally it did get filled. We haven't heard anything from Powell about this, and there has been a few chances for the other Fed speakers to talk about this, but they don't bring it up. But several of the individual regional banks have come in and said that by their own metrics that jobs are not as strong as the headline numbers make them appear, right? Basically this whole thing that there's like an issue with the payrolls number and that you need to look at the household survey is more indicative of where jobs are at right now. So that would suggest that the job market isn't as strong as it appears, but even with that, like jobs are still pretty strong, right? But I think that the numbers that you're getting right now over the last month or two, right, say a lot more than just jobs, right? Because jobs is a lagging indicator, right? Jobs is like, this happens after all this other stuff happens, right? What we're seeing right now is purchasing manager index all coming down, etc., etc. Now retail sales coming down, right? So the data that you're getting is suggesting that by March to May, that the jobs market will reflect a recession, or rather will reflect the economic data that we're having, you know. So I think you could see a narrative shift from from Powell. The issue is just, so I think that the risk there on that one is more this. It's not that Powell doesn't pivot and shift and so forth, but rather that the amount of money that they can actually, or like how much they can ease financial conditions to combat said recession is not as much, right? Like they can't go full bore now because they know that the inflation will come right back, you know? So like, as an example, the market does expect the Federal Reserve will reduce interest rates in the second half of this year, but it's only expecting that they'll decrease interest rates twice by 25 basis points each, right? That's like the maximum amount of easing that you're going to get. That's kind of a problem, right? So you have this risk, as particularly on the equity side, that equities maybe need to come down a little bit. Like, hey, who knows? Maybe they could go all the way down to 3,600 in the S&P 500. Let's just say, okay, just kind of spitball on that. That's a number that analysts have thrown out. Okay, 3,600. The stock market could go down to 3,600, but then not only that, but just like stay down there for a really long time, like many years. And it might not be until like 2025, 2026 that like stocks actually like dig out of it. You know what I mean? That's I think the bigger risk right now. So I really feel like I'm past the jobs. I don't think that the jobs number that we got on January was really all that influential on the market, and I don't really feel like that it's relevant information anymore. So, same with the CPI. I feel like, well, inflation has peaked, and then so it's not interesting anymore. The reports that are interesting to me now, and I'm not saying that these are going to be the ones that have the most impact or anything, but just the ones that are personally interesting to me, are the leading indicators, like the PMIs and stuff like that. And they've all been not just bad, but worse than expected, right? Yet now, people are talking about Fed speakers. I thought I looked at this. Maybe these are ones that just weren't listed on Forex Factory, but let's come over. Yeah, I have Harker and Logan much later in the day. Dude, Harker to speak about the economic outlook at an event hosted by the University of Delaware. Logan due to speak at an event hosted by the University of Texas in Austin. Audience chat questions expected. Then if I come over here, ECB, no, we're way past that. Bostic speaks at the top of the hour. Then, okay. Oh, and then Bullard when the equity markets start. But I don't have any information about where they will be speaking. So on the treasuries, we're going to have to be aware of that for sure. Okay, and it looks like after pushing a little bit higher for a moment, the treasuries are turning back down again. The Economist, an article that I'm interested in. Policy wonks and diplomats accuse Turkey of abandoning the West. Turkish officials claim they are the ones being abandoned. Well, it's not really. It's just... Listen, Turkey is an okay place. It's just the guy that's in there. I keep seeing this all over the place. It's like, hey, you know, that's a good place. The people there are good. I think that generally they want the same things that we want. And it's just the one guy that's in power right now is kind of being an ass. You know? I'm just like all over the place looking for any more information we can glean out of this current market situation. Why not? Let's see if my pen works this morning. Not really. I really hate that. It used to be so good and now it's always slow. What the hell? So there was that big order at 13. It did kind of throw a wrench into things and cause us to, rotate around that spot. I would say that right here is kind of the lower end of the range, but so we'll see if it breaks out, but it does look like it's reversing and or giving back the gains. So wonder if maybe they have new version out. 31144 is what I've got. Because if this next version doesn't fix it, then I may have to just, although it could be something else. It doesn't necessarily have to be the pen. Well, it says that my device has a restart available. Update for restart. See, I'm not running anything extra, so I'm not sure. Oh, what's the notification I get here on ESET? Oh, it wants to restart as well, so. Nope, it's the same version, 31144. Well, we could try restarting it. So when I do that, see, it's still there. Okay. I wonder if they infested it with something, It was like a good tool and they got greedy and now it's not good anymore. That's always how it goes, isn't it? Or maybe my computer's just getting too old. I need a refresh, or maybe just brand new hardware. It used to be so smooth. Let's try it again. No, it doesn't. Why? Why you be like this, Epic Pen? Oh, no, that's not what I want at all. I already have the text. Huh. Well, I'm going to send them a strongly worded email. Okay, so for the for the Fed speaker at the top of the hour, it's from a conference about risk management that is being hosted by his bank. So that's Bostic. So I believe that there is a text expected. Unclear if he will say anything market moving in it. It kind of sounds like that's not as likely, but it's still possible. What if I use the whiteboard? No. Pisses me off, man. Such a good tool. Doesn't work anymore. Well, treasuries are up on its highs again. Man, I tell you what, I mean, it's not like we turned down that much and we are kind of like heading higher again, but I feel bad for whoever it was that bought the S&P 500 up at like 40.32, right? Well, we've certainly had some opportunity. I mean, like in terms of like the amount of volatility to be able to make money out of this, but I haven't seen anything that really made me want to get involved here. Looks like a bunch of people just got swept there in the micros, though. Probably somebody stopping out with the 10-year reaching new highs. If I'm honest, it does kind of make me want to like reverse it for a little bit, but I think that the pressure in the treasuries is going to be higher today again. Although yesterday, you know, we kind of got lucky on that one. And with this one, how much more upside can, and you know, how many more buy orders can there be out of this? I'm not entirely sure. Crypto rapper Razzlecon lands New York City tech job while under house arrest for her Bitcoin heist. You gotta be kidding me, dude. Waiting for the open to see where TLT is at. But we're gonna get, you know, we got 1 point here at the top of the hour. By the way, I just want to make the note again for you guys. Some people will put special characters in their username in Discord. Like instead of using the regular A, they'll use like the Russian A or something like that. And you can barely tell the difference, but it makes it difficult for people to type your name. And if you do that on my Discord, you will be banned. It automatically bans you, and I keep seeing people that happens to. Seems like it's 2 or 3 a week now, even though when I looked on the server there wasn't that many of them. So yeah, you don't want to be that guy. Do you think that's true? Should we fade it? No, I don't think. There's something about this that kind of makes me want to fade it for some reason, but I don't think that's a good idea. In fact, what I'm seeing right now is that we just had a huge burst of volume, and I'm having a hard time seeing where the next burst of volume comes from, and that we're just kind of stuck here for a little while. It's only been 25 minutes since the news happened, so. Oh, yeah, no, I totally think that the Europeans are only going to hike 25 basis points. Yeah. The question on that one is what drove that rumor, right? Where was that coming from? Because I think it's almost a given now. Let's come over here. Excuse me. I'm gonna turn the safety on here so I don't accidentally click it. So if we go to FedWatch, look, the 25 basis point hike for February is almost 96.2% now. So that's 4.5 to 4 3/4. And then I bet you that for March, it's 4 3/4 to 5. So they're saying that they raise once in, I hate that. They're saying that they're going to raise once in February and once in March. And then do they think? No. No, they don't. Only 28.3% think that they will hike a third time to get in May. Okay. But yeah, that's just the US. I understand that's just the US, but they're all going to move together. So yeah, I think that headline was correct. It's just like probably should have already been expecting it. So that it was leaked and everything, that kind of was really interesting. See, look at the cumulative delta on this in the very bottom center. Cumulative delta here. Oh no, this one right here. So middle bluish kind of data series, right? Big spike on the news. Half of it has come back, and I wouldn't be surprised to see all of that volume come back. Price might be overall higher, but you can see the flow. The whole thing is where's the next set of buy orders going to come from? I'm not seeing it, and that's why I'm sitting on the sidelines. Doesn't make sense in my opinion, to fade it, to go against the trend like that after such a dismal number, right? But that's not the question. The question is, what are the next set of orders going to be? And it kind of looks to me like the next set of orders aren't buys. It's people closing positions from it not going anywhere. So like you could maybe fade it a little bit, but you're probably not going to get paid for that one. He said it was confidential, so yeah, it really comes down to one of those things where it's like, if I was a member of the ECB, I would be like, why would I need to tell them that? You know, why would I need to tell the market that they're gonna only raise it 20? I don't need to do that, right? Like, you only do that if you feel like that the market is like way out of kilter and all of that. Maybe it's just using my graphics card, and my graphics card is all wonky. Not all wonky, but you know, it's being used by OBS to do the transcoding. Maybe I should look at that 3060 again. Now I'm gonna come over here and look at 3060s and distract myself, and then the market's gonna like just go. Whoo. Did we get did we get the comments from the Fed speaker? Yeah, the prices aren't looking too bad. They're all under 300. I'd rather see one with 3 fans, though. There's a Rock Strix. That one's already for 340, though. Watch that one. If recession fears are high enough, the dollar goes up or down, and why? Okay, so I don't think that whether there is a recession or not is the key driver of what the dollar does. So it appears right now that the scarier things are that the more the dollar goes up. So it's more likely that it goes up. But what's going to matter more is like what's happening in other countries and how bad those look, right? You know, like, so for instance, if the Japanese yen like avoids disaster and everything ends up being fine, and like their policy ends up being right, and you know, like all of that sort of stuff, then I think you could see the yen strengthen and the dollar go down. So, does that make sense? Like, how well the United States is doing relative to other countries matters more. And if all of a sudden we go into a situation where the US is not doing as well as other countries, then we're in trouble, right? But most likely, it continues to move up. Well, it wouldn't stop being the reference currency. It's just, it will probably go to, we've lived in this world for a really long time where the euro was strengthening against the dollar, for instance, right? And the dollar was weak, and that was a buoy to stock markets and stuff like that. And, Europe has a very different set of challenges from the United States. So that sort of a thing is more likely than you might realize, right? Ah, there's the one that I want. It's got a ways left, though. There's no other country that could step up. Yeah, but you don't have to have like a... Ignore Ray Dalio. He's just selling books. like the funny thing about Ray Dalio, not that he's a terrible investor and that he should be just completely ignored or anything, but he's always been talking about these sorts of things, and his biggest screw ups, his biggest mistakes were on bets of this nature that didn't turn out. For instance, when the Mexican peso was in crisis, he thought that it was going to be this big currency apocalypse, and then like it happened, and everybody was just kind of like, okay, nothing happened, and he didn't get paid, basically. So he's been obsessed with this idea like his whole career, and he keeps like losing money from it. So I wouldn't pay too much attention to it. It's interesting, I guess, but it's just marketing. Into the zone we go. Yeah, well, we did break out a little bit higher, and like, look, the volume is definitely there. I mean, the amount of volume behind that one. I don't know. That looks like that should be like news driven move, but I don't see anything pushing it. So, so that move equaled the amount of downside pullback that we had seen. Is there more to it? There could be. I'd have to be careful about trying to get in just like right here. It's definitely like a breakout though, so we're definitely into a situation where I wouldn't be trying to short it. But you don't want to be like, oh, I just bought 19 and it's already down 2 ticks on me, right? No, but that was 30 minutes ago, NASDAQ killer. It was 30 minutes ago. I think that it was the retail sales that really moved the market too, by the way. I mean, the PPI was bad, but I think that so we often forget this, but like the biggest pieces of news, at least in the current market, is non-farms payroll, CPI, and then retail sales. Okay, retail sales is the most important leading indicator that we get. Okay, and then after that, it's the PMIs. Okay, retail sales tell us a lot about where the economy is going, because the U.S. economy is based largely on retail sales. So it's important. Yeah. Well, so the reason why I say it's over is like, okay, so there was the news, and then we had the short-term liquidity hole, and we were saying, okay, so like, is more volume going to come in? What's going to push that volume? We weren't sure, so we waited. An impulse came, and it was a very, very strong and aggressive one, right? Like, so strong and aggressive that it suggests another set of news, but I don't see that headline. I don't see that headline, but we moved. We sure moved. But like we were just saying, and like Uzi is saying, it's like, it's really hard to, you're not getting. Okay, so what I'm saying has nothing to do with what the future orders are going to be per se, so much as it is what we know about volatility and what we know about the stylized behavior of order flow, right? So the stylized behavior of order flow is that the further up of an impulse we've had here, the more that more difficult it's going to be for them to sustain it, essentially, right? Because you've exhausted all of the liquidity here. There's going to be this hole that sucks you back. So you got to be careful about chasing that one. And then just the price that you're getting, like, relatively speaking, isn't very good. So like right there at 20 with an iceberg there, and it's a few ticks off, like that looks a little bit better. If I was really expecting like another push and continuation, then I mean, it could maybe justify the 20. But when those first few ticks came through, I probably, you know, because it was started a little bit below the lows, so I probably could have taken it when it broke the lows, but I guess I wasn't paying attention, so I think I did miss an opportunity. Being patient. I don't know, man. Look at that. 3 ticks up so fast. This market does not scream to me, be patient. This market screams to me, you're too late, doofus. Look at that. Oh, they got smacked down there. Somebody hit back really hard there at 22.5. What was with that? You say 2K MBO in the 5-year. You're talking about the one at 0.2 half. Has SPY gone down because investors are buying short-term T-bills and getting for? Well, maybe. It looks to me. Well, so first of all, we're not explicitly down. We had the big spike and then we came back, right? But I do think when I look at the way that played off in the S&P 500, I think some of that flow has to be playing the scenario where the economic news is so bad that bad news is bad. Like little bit bad is good because it's like, well, it's not too bad for the economy, but the Federal Reserve can back off. That's good. But like too bad is like we're going to go into a recession and stocks are going to have to reprice because of that. So I think it's not like the entire market is going that way, and so it wasn't like a straight down move, and we're actually up relative to where we were from the news, just not as high from the high after the news. So it's mixed. It's mixed, right? But then you come over here into the treasuries and you look at that, and it's like, yeah, the flow in the treasury is long. Well, after that last push, it's long. Crypto coming back? Well, it is running. So the caution that I would give you on cryptocurrency is that it's possible, if not likely, from the metrics and the volume that we've been looking at, that all of that move in cryptocurrency is all from one person. So that doesn't really tell you a whole lot about whether that's going to continue or not, right? Jeez, that's like the volume is coming out. Yeah, people could dogpile in and start leveraging. No, so it looks like that somebody came in and started pushing price up with the intention of pushing out all of the shorts, and I think that like the shorts they're all done, right? So it's kind of a similar problem to what we're looking at here in the treasuries. Is like you just saw a ton of volume come out. And that last spurt of volume was like 20,000 contracts from nowhere, right? So you just had 20,000 contracts come out of nowhere. You want to buy it. That means that you think even more buyers are going to come. Where are they going to come from? Why are they going to come? When are they going to come? How do we know that? We don't know that. So I just kind of have to sit here and be like, darn, I missed it. Right? Because over there in Bitcoin, that same person could come in and say, okay, I'm going to take my profits now and crash it. Right. Certainly, though, well, and more so than that, I just don't care about. I just don't want to be involved in the crypto industry anymore, man. You said in that theory of yours that a buyer will trigger other buy orders or something like that. We're talking about in crypto. I mean, what happened in crypto was that somebody came for everybody's stops, for sure. Like the amount of leveraged short positions that got liquidated in Bitcoin was a lot, and that's certainly shown, right? Oh, no, I don't think I was saying that because this orders came through that we'll see more orders like that. That's not what I was trying to say. Because it's quite the opposite, right? It's you might be misunderstanding what I'm saying. Seeing a market order, a market buy order, does not mean that that market buy order causes more market buy orders to occur, right? That was a theory, and people tested that using these sorts of, physics models where, like the kind of physics model that you would use to model nuclear fission, right? Nuclear fission, it's like you shoot a neutron in and it hits an atom, and then that explodes that atom and makes another neutron go off. And there's a certain threshold at which, enough of those neutrons come in that it creates a chain reaction sort of a thing, right? So they were using models like that to model the market behavior, and it did not catch the stylized behaviors of markets that they saw. So they went back and they said, well, what's with this? Because something that we do know is that there is autocorrelation in order flow signs. So if I'm seeing buy orders, I am more likely to see future buy orders. The question is why? Why do you see the future buy orders? So they came out with a different theory, and the different theory was maybe it's because there's one big guy that has to buy a ton of it, and he just has to spread it out over a really long period of time. And so because of this large meta order buyer, you'll tend to see that imbalance in the order flow over a long period of time. And when they went and they modeled that, it matched the behavior of the markets almost exactly, right? At least for the metrics that they were looking at. But then it introduced the new mystery, which was, why does the market follow a square root law? Why does a meta order have a square root law? Right. Okay. So now that we know that the autocorrelation of meta orders, at least our leading theory is that it is due to the presence of large meta orders in the markets. Now let's try and apply it to this current situation. We saw a large meta order, which was the people buying from the retail sales news, right? Okay, so that ended. Then what do we get? Well, we should see the square root law come into, when short-term regime change, which is what we saw. Okay, so now we wait. So now is there going to be another leg of that meta order? I don't know. Is there like way more money that wants to trade off of that retail sales? Hard for me to say. Kind of looked to me like maybe there wasn't. Okay, now we got this big push up. So was that a second leg of a meta order from retail sales? It's possible. It is very possible. Very, very possible. But at the same time, like, it came in so strongly and all at once, it kind of suggests to me something else is going on, Like, maybe there was some news that happened that we missed. Okay, Feds Bullard is speaking, by the way. But there could be some other things going on, right? So for instance, there could be a meta order of people buying because we surpassed the high from January 13th. Okay. That's not something that I would consider to be an accurate predictor of order flows, but it happened and we have seen some volume come in afterwards, right? So that's not something that I would be able to make an effective prediction from, but maybe after the fact, if we have no better reason to explain it, we might say that, because there can be situations where you cross a certain line and people have to reposition, and it can like really push things, you might not be able to predict that the cross of that price is going to change things. But, those situations do happen. You get what I mean? Lost you on fission. Do you understand how nuclear fission works? Okay. Well, don't be the guy that's been stuck at long at 40-30 all morning in the S&P 500. Okay, that's all. Yeah, they've built out a pretty good range here now at around 24. Yeah, we could have done right. Oh, actually, maybe not. Yeah, right here. So if I had taken the trade that I probably should have and I was paying attention, probably would be long from like 18. You're watching Chernobyl for the second time? Okay, so in nuclear fission, you have neutrons. The atom breaks up and a neutron comes off of the atom, right? And then that neutron goes shooting out. And there's a certain probability that that neutron hits another atom, right? And if it hits another atom, that atom's going to explode and shoot off neutrons as well, right? Now, normally, there's not enough of those neutrons floating around to create a chain reaction, right? And you have like the graphite in there to absorb some of those neutrons so that it never gets beyond that critical point where it creates a chain reaction. Yeah, you need to be close. Yeah, it's when you have like the rod to get, it's all together and it's inside of this reflective material so that the neutrons bounce back into it, right? It's all about reaching this critical mass where, right now the number of neutrons shooting around isn't enough, but if you get enough of them, then all of a sudden it hits a critical reaction point, and then you get the fission reaction that we can use to make power from, right? Okay. So why am I talking about that? Okay, so the theory from most technical analysis was, I see there's a buy order, that buy order causes me to also buy it. So basically what you're saying is, I'm an atom and I got hit by a neutron, and so I'm going to buy too. And then my buy might induce somebody else to buy, and so on and so forth. And like that continues until you reach a critical threshold at which it becomes a self-sustaining move and it creates a trend, right? That is like the theory, right? And what I'm saying is that when they tried to model the markets in that way, it didn't match what the markets actually do. Like they did a model and then they compared their model to the actual behavior of the markets and they didn't match. There's another stack right there, 26. Somebody hit them. Ooh, big iceberg. Well, this one's interesting because now you got like kind of an they did do the break, and then after the break there was kind of the level break set up for another one, but they pushed through it. I've never seen it play out like that before. That one was a little weird. So normally seeing an iceberg like that would make me be like, oh yeah, let's go long. But like that time it popped and fizzled out real quick. But let's see there. If I start seeing more sell orders after 24, then maybe things have changed. I should say that on that move up that I did not see the deltas change. That in fact, if anything, I'm starting to see sell orders come in. Which bank or hedge fund do you think is the most successful and why? Well, I think that if you're looking at like in the history of everything, it's definitely Renaissance Capital. They don't return as much now, but you have to realize that for a time they basically had a 30-year average return of like 50%, which is like insane, right? You imagine making 50% every year for 30 years? That's nuts. If I make a YouTube channel where I brag about my trading success, can the SEC sue you? Okay, so if you make a YouTube channel where you make false claims about how successful you're being with futures trading, it's going to be the FTC, not the SEC, that will come after you. Because the FTC is the one that polices and governs like false advertising and things like that. So it's more likely the FTC comes after you. So for instance, with the Warrior Trading, he had made some false claims and you know, presented like his course would make you successful when most of his traders were failing. So that's like a really big key. Is like if I come in and I say, if you buy this and everybody that buys this, they're being really successful with it and everything, right? If that's not the average performance of your customer, then you can't say that, right? And you can't just take one person that did really well and then say that's how all of my traders are doing, for instance, right? And so anyways, who came after Warrior Trading? It was the FTC, not the SEC. That reminds me, I don't see many Warrior Trading ads anymore these days. That's true. I mean, I don't like being like the nanny state sort of a thing. But when I look at how things play out on social media, it's just inevitable that like at the highest level, that some of the cheesiest, stupidest stuff works because there's a lot of people out there that are, you know, remember 50% of people are below average intelligence, right? So, you know, it does make me feel like, hey, you know what, to do what I'm doing right now, maybe you should have to have a certification. Or maybe you have to take a test similar to the Series 65 so that you know all of the rules surrounding these sorts of things and you know enough about markets, and then they can kind of apply more strict rules to it too. They can say like, okay, yeah, you can't say anything about the possibility of gains without making equally stressed comments without making equally emphasized comments about the risk of loss, right? This is getting tense right here, man, at 27. So I should be able to get at least a little bit here. Here's Bullard. Okay, so the Bullard event is a Wall Street Journal event. So that seems like one that would be more likely to be market moving. So of course, I'm not doing this with my live account, but what I'm doing here on my sim here is very, very dangerous. Yeah, we are getting some distribution around here. I'm not really seeing the liquidity behave. We're seeing something very different. Yeah. Buying the high is never safe even when it works out. So here's the thing. What are we actually seeing here at the highs? We're seeing something very different from the liquidity hole, right? Like, look, the liquidity around this area increased, right? We saw some big icebergs, and now maybe it decreases from here, but you know, there's like that big old fatty at 28. It's kind of, it's a little bit different. And so what would that be? Well, that, in my opinion, is something very indicative of a large meta order buying, right? In other words, somebody has come in and they need to buy a lot now for whatever reason. And so they're providing some liquidity to help them in their buying operation. Yeah, does someone want the fatty? Okay, so Bullard is saying Fed policy is nearly restrictive, but not quite there yet. So it seems to me like Bullard is still holding to this like Taylor rule thing. And I think that, well, okay, so we're already lost too much on this sim trade. So let's close that. That means that we could see some, you know, the market is a little bit vulnerable here, and Bostic could slam the policy down. This could be the Federal Reserve coming in and pushing back against the easy financial conditions that we'd been waiting for like a week, you know. Yeah, and he's saying, I want the Fed policy to err on the tighter side. Oh, wait, that's a... No. This is going to be interesting. Okay. Fed wants to guarantee that inflation will remain on a steady path back to target and will not budge. Okay, so there's a big order at 21.5 now. Oh, it pulled mostly. That one was kind of tense. Miguel, so I am using the tick, there's a what do we call it? Tick aggregation feature of Jigsaw. So you notice that my DOM is not priced in quarters of a point, it's just 1 point each. So my DOM is actually combining 4 price levels into one, and that's why it looks like I have more depth on my DOM than yours. Yeah, it's a cool new feature of Jigsaw. I really, really like it. Especially if you want to trade stocks, absolutely essential feature, because otherwise you have this huge spread and you just can't see what's going on at all. See them playing around with some single orders in this area. But I'm not seeing as much of a reaction. Damn. I did not like the way that that just played out, man. Nope, I'm not even gonna bother. Not even gonna bother. No, I won't look at it. Yeah, it does make me mad. This is why it makes me mad, Uzi. Because I feel like I've worked so hard to try and explain something about how to prove something empirically and how to base your trading off of things that like we know are actually happening, and how to avoid falling into the traps where your mind thinks it sees something that's not actually there. And you've certainly been here and listened to all of that stuff, and then you're showing me something that is falling into all of those traps, and so I feel like I haven't accomplished anything. Okay, so like he's coming in and he's showing that there was a zone, and that it went into that zone, and then it flipped from there, right? So how do you know that that's a behavior that you can actually trade off of successfully? Well, you don't. I mean, you think that you're seeing a pattern, but number one, it's not a pattern that we can describe in a specific enough way that I can go and backtest it, right? Are we gonna say if we had come to one of those red levels that I try and fade it then? Right? Yeah, but the fact that you even care about the level says that my teachings have done nothing. That's what it says to me. I mean, I noticed that a market tends to go to single prints. Like they single prints seem to mean something, but like again, how do I test that? You know? Because if I just say when it touches a single print, go short there, that's not gonna work out, right? Because when it doesn't go through it, it's gonna go through it super hard. Well, I took a little trade there, and I was getting some good, I was getting it to run really well as people started to get a little bit scared of Bullard, but it's not doing that, right? And when I look at the volume, it's quite healthy. So it looks to me like the meta order buyers are like still out there. Okay, so they reacted a little bit like that, saying, what was it that he said exactly? He said something kind of hawkish. So it was something about hindsighting much. Well, no, you missed. I had a position on there, NASDAQ killer. Yeah, I had a position on there and I took it off. It's actually going now, and I would have gotten the target that I wanted, but like what I'm seeing is that even though Bullard is saying really aggressive things, like, look, it's not. The risk of a soft landing is that inflation data turns out to be incorrect, forcing the Fed to react more forcefully. And that's the comment that is causing more of a reaction here. But while the treasuries initially sold off of that, they then bought back up very aggressively. And you're starting to see a reaction over here in the S&P 500 as well. Now that does not jive up with everything that I would think would be. There you go. So that's a little bit more like what I would think would happen. It's like that should be a sell the treasuries event. But I think that there are some people out here buying it. Maybe it's for technical reasons. Who knows? That they took it up. So we'll see if like the sellers now overwhelm them. Holy shnikes. Like what the fetch? Okay, I'm not gonna touch it. That's when I'm seeing stuff like that, that's not risks that I want to take, but that was wild. Still at 3.39. Yeah, I have not seen a back and forth like that. For a second there, I was like, oh man, maybe I shouldn't have taken my position off. But now after seeing that, I'm like, oh, I'm so glad, because I would be so overly stressed out right now if I had been in that. It's even funnier with you probably have your alerts lower. I still have mine set to 3,000. At Davos, Germany's Schultz is speaking, and that's also, I don't know if the market's gonna move off of that, but it makes things a little bit more stressful. I do feel stressed out now. Like I can feel it. I think I was a little stressed out this week anyways. Maybe I should try and relax a little bit during the trading here. Yeah, but seeing the market move like that stresses me out. Like, because now it's like, I should be taking a trade. Should I be in a trade? Do I take one here? Like, it's a much more risky situation. This is just wild action. If I come back and if I sit down and say, okay, I'm done for the day, I just made $3 and that's it. Actually, I would be happy with that because I think that puts my account back to 1,400, right? Oh, nope. I need $6 more. Darn. It's also stressful because like I could see things kind of starting to play out like that, and I get out just before it all happens. So it was kind of like, oh, I could have still been in. I just, for once, I want people to say, you're right, Seth. Technical analysis is bullshit. We should stop paying attention to things that we can't prove. We should utilize things that we know will predict future orders. Like breaking market news. Just for frickin' once. You know? Like I come into Discord and it's just this, you know, it's always people coming in and they want to talk about stupid shit. Oh, I like to trade reversals. Okay, well. Also, some people saying I look like Johnny Sins. No, it's not. There's not. It's a hard thing. You prove it and you use it, or you can't prove it and you ignore it. That's straight up. That's it. Right? Because otherwise we're stuck in this world of, okay, so now there's a multifaceted approach, okay, but like, is the thing actually helping you or not? Like, that's what it really comes down to, is there an edge to that thing or not? And since we can't prove it, right? All we're stuck in is you believe something and you can't prove it. So what am I supposed to do? Well, I can go through, like, here's how you do the empirical method. Here's what's empirical. Here's what's anecdotal. Here's a process of doing that kind of scientific process as it applies to the market. Here's the things that we know, but it's all like just a bunch of noise. And it does bother me because I feel like it undermines the whole thing. It's like, oh yeah, well, Seth says, you know, be empirical and everything, but the person that's been like in here watching his stream the longest doesn't do that. Okay, thanks. I want other traders to come in and be successful, and I keep seeing other traders doing the same stupid shit over and over and over again, regardless of how hard I try and how much I say, and it's like I'm just not making a dent in the problem whatsoever. I would love to hear a broker's opinion on trading strategies. Well, so I've spoken to brokers. In fact, I bet you that if you went to like Optimus and you like emailed Z, he would probably tell you. But, you know, they don't necessarily get special insight. Like, how to describe that? Just because they can see your account and what you're doing doesn't mean that they understand what exactly it is that you're doing or what your strategy actually is, right? Instead, what they can do is they can go, oh, well, this guy consistently makes money, and they start talking and they develop a relationship, and then they might get some insight from talking to him about what their strategy is. And the only thing that I've heard from brokers on that sort of thing is that the guys that are kind of like more position swinging tend to be the ones that are in that position. So oh, I missed Socrates' comment here. TA is absolutely BS. It's fun for theory crafting, but I would agree with that. TA is basically as good as moon phases and horoscopes, order flows, the way transacted volume cannot lie. Yeah. Well, but remember that you can apply technical analysis to order flow, right? So technical analysis is not just about whether you're looking at price or whether you're looking at orders, right? Technical analysis is more about trying to use the past data generated by the market to predict what the future data generated by the market is going to be. So for instance, if I came in and I said cumulative delta is rising, ergo I think that they will continue to buy, that would be applying technical analysis, right? That's why I made a very earlier. What I'm using rhythmic salty gravy. So that's why earlier on, when we were talking about the nuclear fission thing, I made this really clear distinction that it's not that people see a buyer and so they decide to buy too, and that's why it moves up. That would support the technical analysis side of things, which is that I can use the data that I'm coming in from the market and understand how the market is going to react to that current market price and predict that they're going to do something in the future from that. That's technical analysis. Whereas if the autocorrelation in order flow is just the consequence of a large buyer coming in and buying things over a long period of time, that's different, because the autocorrelation is not caused by the autocorrelation itself. It's a consequence of somebody else coming in and doing something. Do you think you'd be a better... No, I don't think so. I mean, maybe I might be focused more on the markets in some situations and I might miss less trades, but I would know a lot less. So being on the stream not only gives me access to more people and information than you would normally get as a retail trader, but it also pushes you in a way that you normally wouldn't get pushed as a retail trader. Bullard says the decline in long-term rates probably reflects market expectation for less inflation and shows confidence in the Fed. Okay. So anyways, like, a lot of it is kind of like, what is cause and effect, right? Well, if somebody comes in and buys $100,000 worth of treasuries, it's going to move price up. Okay, that's cause and effect. But price already moved up, and so it's going to move up a little bit more. That's also saying cause and effect, right? It's just that second one, we can't prove that happens, right? Because you could come in and you could say, well, it moved up. That doesn't necessarily mean that there's a big guy coming in and buying it with a large meta order. We don't actually know. We don't really have enough information to prove that that's what's happening until like after it's happened, right? So you have to take the other approach, right? You take the approach which is the one based on cause and effect. I know that somebody's going to come in and buy this up because XYZ thing, right? Options gamma, end of month rebalancing, reaction to news, right? I know that they're going to buy it up before they do it. And then I take my position and I watch the order flow, and then I should see that order flow come in, that effect from the cause that I've predicted, right? Have you backtested market making strategies? So in terms of like backtesting, like me going into NinjaTrader and on all of that sort of stuff. You know, the market making strategies that I'm familiar with require you to both look at multiple instruments and the level 2. So you can't really backtest it. You know what I mean? I am getting like the data, and then maybe someday I'll be able to backtest it, but right now I can't really backtest those, right? But we have all of these models that try to explain why or how market making can be profitable, that do show how it's possible, right? So market making can be profitable. You just have to realize that it's competitive, right? So I can prove empirically that market making is a successful strategy. It's just I personally am not really capable of taking advantage of that strategy. I don't got the stuff. I would need to be a robot to utilize those strategies. Well, I definitely would have gotten my order filled now. I had an order out at like a 3.4. And I took 3 instead of 10 or 11. But it's okay, because I avoided a lot of volatility and I was nervous. It's good. The moment the treasury's kind of so like you get in the head and shoulders pattern. So let's look at this one. You see it, right? Head and shoulders. You could definitely, not only could you call it a head and shoulders, but you can confirm a headline break on it. But does that mean that we're going to come all the way back to 115.19? No, I don't think it tells you anything. Doesn't tell you anything. Well, I'm telling you, man, if you put a trade on and you don't feel nervous, you're lying to yourself. The only difference between me and everybody else is my willingness to say it. I think that a lot of people don't even necessarily recognize the nervous feelings in themselves. You have a risk management plan in place? No, that's not it, because I still have to be sitting here watching the market, staying vigilant, listening to the squawk, watching the order flow, and looking for things that could screw my trade up and reasons to get out. Right? And you can screw it up very easily. You're just a little too slow or not paying attention, or you misinterpret something. You've got to be on, because it only takes, it's really hard to find something that really easily predicts the orders. It's not only that, but then there's so many things that could contradict your setup. They have nothing to do with the setup itself, that just come in and ruin the trade because of dumb luck, What do you mean, are you getting paid, Seth? I made $3. I made $3 and I made $30 yesterday, so I'm okay. Feeling okay about the week so far. So it sounds like Feds Bullard is done speaking, maybe? Let's build a fund with your $3 a USD capital. Yeah. You know, do you think that it is fair that there are certain kind of investments that are restricted to only people that have enough money? You know, like for instance, a hedge fund, right? You can only sell hedge funds to qualified clients, I believe it is, right? Which means that you have to have over $1 million in assets. Why? Why can't I just start a fund and let anybody invest in it that I want? Then as long as they're not putting their whole retirement in it, why isn't that allowed? Why aren't you guys allowed to all, you know, invest $1,000 and then we trade it as a hedge fund? Why not? Does the barrier, the dollar amount barrier, really protect people? I'm not sure it does, especially when they can just go and bet their money on Bitcoin or GameStop or options, you know? Maybe that made sense when it was the 1950s, but like you can't have both. Like I shouldn't be able to come in and lose more than I risk by putting on options positions or futures positions, but then not be able to put money into a hedge fund, you know? Wouldn't they be restricted by the very nature of them requiring so much capital to begin with? With the hedge funds, not necessarily. Probably is a case that like if there was no, I think what you're trying to say is if there were no rules, wouldn't the more successful funds still have minimum investment amounts that would be above what most people can afford? That might be true, because some of those strategies do need a certain amount of capital to work. Yeah, and then there's the PDT rule for stocks, but traders can trade futures 200 to 1. It's just because the regulations didn't catch up to these other things, right? It's because all of these rules that we have, I don't know when the PDT rule was made, but a lot of these laws that we have came from like 1940, right? Like think about that. Rules that haven't changed for 80 years, right? And then like these new products came along and they said, oh, well, the old laws don't apply to them. Futures aren't securities, which is accurate based on what a security is and what a future is, but they should still be regulated. So they made the CFTC, you know? And I think that the cryptocurrency people, they want the same thing. They want a regulatory agency that's just for cryptocurrencies. But my question is, what is it that's about them that's different, that requires different risk protections for the public, right? I don't think that changes. It's risky. So either you have to protect people from themselves or you don't. You know? So why do I care? Well, one, because I want everybody to be able to invest $1,000 into my hedge fund, but also because there are other kinds of investments that it kind of prevents. So like, if I want to do if I have a small business and I want to offer shares in my small business, right? Well, in order for me to sell shares in my business, that's a security. So I have to register the security, right? And then if I want it to be listed on an exchange and everything, there's all of these hoops that I have to go through to get it listed on the exchange. And it's not like it can't be done or anything, but like for most small businesses, it just doesn't make any sense, right? So if I wanted to do something like I wanted to make an exchange that was all about micro investing in small businesses, right? You can't realistically do it under the current regime, because you're not going to do it as like a federally listed NASDAQ security. You're just not. That doesn't make sense. So you're gonna have to do it on some of these smaller things, and then if you want to do it on some of the, you know, the cheaper options, it limits who can invest in it. So, you know, it can either only be not qualified. What is the word? I think it starts with an F. It's one of these first ones. For some reason, I keep hearing the word bona fide in my head, but that's not what it is. Come on, where is it? Minimum financial. Hotels, except reporting advisors. SEC fines. That's $10,000 or 5 years. Well, okay, so one of them is a private placement. So if you want to do it as a private placement, you can't have more than 10 retail investors in it. So that's one. Do I not have a card about this shit? Come on. Accredited. That's the word I'm looking for. You have to be an accredited investor, which is what? Net worth of 100 million. Or a gross income of 200,000 or 300,000 for a couple, and then net worth excludes the primary residence, right? So I'm just saying, because of all these rules, now that we have the internet and we have the ability to have like micro investing exchange, we can't really do it because of the regulations. There has to be a way to set up a business structure for a hedge fund that would allow for $1,000 investment partnership, etc. No. So what? So the issue is that you're an investment company, right? And if you're an investment company and you register as such, and you register as like a mutual fund, then there's all of these qualifications that you have to meet, right? And if you want to be in business without meeting those qualifications, you can do it, but then you're a hedge fund, right? So now you're limited to accredited investors, essentially. Now, what you can do is they have added an additional exemption, which is kind of intended more for like investment advisors that are involved in this sort of, it's a part of their business anyways. So like if you are an investment advisor representative, then you can invest in them, right? But then there's the other issue, which is that there's only like one hedge fund out there that will allow you to put in $1,000. Everything else requires much higher minimum. So I'm watching this here. I took the long at 3.89, right? And I got out of it. So I was kind of thinking, if we wait for the Fed speaker to be done, it looks like the buyer's still there and that it's going to come through. But what I'm seeing now is that we've seen some acceleration. We're at the top, but we only got back to 3.89. We only got back to 3.89, maybe 3.86. And while I am seeing some volume come through to the long side now, but it's a little bit sketchy. So I guess I'm just saying that did not play out the way that I thought at all. I'm really shocked to see us one tick from the high and only be at 3.85 and not 3.75. Sure does look like it's gonna bust, doesn't it? That is a level break setup for sure. It's been a long time since we've had a break, but that trend is up, so supposedly the level break should work. I don't know if this time qualifies as it works every time or not. The dollar, well, I'm zoomed in really close on the dollar here right now. The dollar has been kind of weird this morning because of the yen thing, and they're still in the like recovery mode. Yeah, it looks like they're having a hard time breaking to that 28, doesn't it? Yeah, 116 evens does make sense from like a upside target perspective. I know that move up in the treasuries did not have the volume behind it. That's all I can really say. Darn. Well, there's my chance to get 389 if I wanted it, right? What time is it? 8:18. Spoo's moving now. That's interesting. What were your end of year results for 2022? I don't remember. I had a loss at the end of the year, and then there wasn't many opportunities after that. So it ended up that like through the second half of the year, I was profitable, but not really very much after you factored in the data costs. It basically became a lot less impressive, right? Now on the sim account in the treasuries, it was 30% on the year. That was pretty cool, but you haven't justified an entry today? Really? When it broke out, I really should have been long at 18, man. That one really, I don't know, maybe it just happened too fast, but I kind of, because I didn't feel like I was saying anything important or that I was on too big of a rant or anything. It was just like it moved so quickly that by the time I realized what was going on, I felt like it was too late. Yeah, I think you're right here, Uzi. Like, it is not there is volume and something's happening here, but this is one of those, oh, I get suckered into doing something and then it goes nowhere sorts of situations, because the cumulative delta is relatively flat and we're actually seeing icebergs in here. So I did take one trade, but we basically scratched it. We made $3 on it. Yeah, hungry hippos. Yeah, but it was like I was saying, like, we come up here, what we should be seeing up here is like liquidity hole, inside bid and offer being kind of a little bit strained. And that's not what I'm really seeing. What I'm seeing is most, so there is a little bit of falling at 26 there, but through most of these prices, every time that it ticks, it stacks really aggressively, and the liquidity overall still looks healthy here. I mean, only having 1,000s up is weak, of course, but like they keep putting big stacks in places. So right now it's at 25 and at 28. And there's even a decent amount at 27. So that's a McDouble. You should think. It's fine. I think that this week I need to manage the stress level, for whatever reason. There's some other things that are going on that aren't necessarily bad, but I just can't talk about right now. And I can feel my body is going into stressed out mode. So I need to be really cognizant of that and manage it. You take walking the wall. I haven't recently because it's so effing cold outside. Otherwise, I would strap the children into the stroller. I'd strap the kids into the stroller and go for a walk every night. Yeah, I haven't been working out as much either because, well, on Monday I just cleaned because there was still boxes from Christmas. Still boxes from Christmas. And my heater, I need more propane. Now, I think tonight, instead of going out into the garage, that I'll just do a little bit of like stairs and stuff like that. Alcohol, no thank you. You know, I've been reading a lot of stuff recently about how millennials have basically rejected drinking. Overall, drinking's not good for you, right? Wouldn't recommend drinking much. S&P 500 has been awful. You know, if you had asked me where we would be at by the end of the stream, I don't think that I would have said within 10 points of where we were. They're smoking weed. Yeah, probably. So I've been listening to Linkin Park lately, or I don't know why, it just kind of came into my head, and so I started going, listening to songs and realizing how much content they actually made. I only really thought about like their first 2 albums, but they've got a lot of stuff, and they have all the remixes too. And really, if you think about it, Linkin Park was like the millennials, like big rock band, right? Like for Generation X, it was Nirvana. So millennials, we had Linkin Park. which kind of seems, because Linkin Park is pretty dang angsty, I felt like Linkin Park was like, it was still hard, but it wasn't as angsty as like Limp Bizkit and all of these. Yeah, okay, Andre brings up Limp Bizkit, right? I felt like it wasn't as trashy and emo and all this nonsense as Limp Bizkit was. But when you listen to the lyrics, it really is quite emo. And but the thing that I thought was really interesting about it is that it really did perfectly capture, like, that is the millennials band, because you listen to the lyrics to all of their songs perfectly express the way that millennials feel today. So many of their songs basically like mad at like the expectations that are being placed upon them, wanting to go and do their own thing, constantly feeling like that things aren't working out for them, or that they're going crazy. Like all of the things that are like stereotypically millennial attitudes were all perfectly reflected in Linkin Park's lyrics. So it really does make Linkin Park the generational band, right? So which is it though? Was it that Linkin Park, knew how millennials felt and made the songs, that perfectly reflected that? Or did millennials start to feel like that because that's the way that their media was? You know what I mean? Chicken or egg? Which came first? Dang, I haven't gotten any fills on my offers. It's just been sitting at 26 now. I'm not necessarily seeing the liquidity hold per se, but enough of volume is traded here between 25.5 and 26 now that probably don't take another trade. Not another live trade, at least. I still got this up here, but it's not going very well. $3,000 lots on both sides. I wonder if, so, we had that aggressive push when we broke out and we pushed up to these new highs, right? And then when Bullard was speaking, we did see some bearish price action. It seemed like things were going to go. I wonder if what actually happened was that we did have some bears come in and that they're just kind of meeting in the middle at 25.5, 26 now. Like, two large meta orders clashing into each other right now, because like there's lots of volume, but the Cumulative delta isn't shifting. Price is just going sideways. And it is a lot at 26. So Nick Timoros tweeted a little while ago saying Bullard said his SEP rate projection for 2023 would take the funds rate to 5.25 to 5.5 this year. He sounded open to raising rates by 50 basis points on February 1st. He likes the idea of taking out insurance against developments that could keep inflation high. Him being open to raising rates by 50 basis points on February 1st was something that I didn't quite pick up on from him. But if Nick Timoros is saying it, we have to take that seriously. So, no, are you trolling me now? Because we had this conversation yesterday and you know that it made me mad. I really don't like talking about other people, man. I've been traumatized, okay? I've been traumatized. So all I'm saying is, go dig deep on some of the Forex forums you'll find on Baby Pips. Go to Baby Pips and start digging deep, and you could literally go and read about drama from ICT going back 10 years. Drama that's literally been going on for 10 years. You're right. You were of course you were the one that was like agreeing with me yesterday. I wanted to go into it and be like, okay, like let's just pull out some like more specific stuff so that people can have more clear understanding of why you probably want to stay away. And I started reading the thread and I was like, no, I don't have time for this. It's too long. It's literally, I mean, I'm not kidding. These guys at Baby Pips literally have posts they made in 2013. Not even kidding. It's just crazy. The guy is an absolute narcissist. There, it has to be. That's why when him and Vinny were going at it, it got so heated, because they're both narcissists, right? The man invented. Oh, I did see that one. Oh my gosh! Like the thing that I think is funny about it is that it looks to me like what happened was some kid that really didn't know anything about trading came in and said, oh, I'm going to be the expert, and made all of the big claims and everything, and just never gave up on the gig. And now he has a pretty big channel. He has like 400,000 subscribers or something like that. Like, it's actually a lot. From Bloomberg, all banks play for performance, so if the performance isn't there, the compensation isn't going to be there, says JP Morgan's Viz Rajavan. It's amazing what a narcissist can do. Yeah, and then after that, I watched a video that was out a few days ago from Charisma on Command, I think it was, talking about narcissism as it related to Mr. The guy that made CryptoZoo. Forget his name. I don't like him enough to remember his name, but I digress. And they were saying here are like some narcissistic things, like if you lay a criticism at them, they just deflect it. Logan Paul, you're right, Logan Paul. So I was thinking about it, like, you know, so am I getting defensive and narcissistic? Like, I guess on some level, when I see things, it bothers me because it says to me that I'm not being very effective at teaching the things that I want to teach, or at least not very persuasive, right? So I think to some extent that maybe is kind of narcissistic, but I don't think that it's comes from a place of like, because really what a narcissist is somebody that like it has an opinion that's so low about themselves that the praise and things that they get from other people is like all they have, right? And I really don't think that reflects me. I really don't care what people think about me. I get a high off of the interaction from people, and I will do dumb things and not even think about it. And then afterwards, I might realize, oh, you know, it would have been better if I'd done this. Maybe I should have, you know, changed the tone of my voice when I did this, and then all of these sorts of things. And but then I go, well, you know what happened, and I can't worry about it. And that's the life that I've had to live, right? So I don't think it's that. I think what it is that it's almost like a trait that I would share with somebody that's autistic, is that I just can't stand it when I see somebody say something that I know isn't true. I just can't stand it. It's like you've come in and you've rearranged the room, is how I feel. I feel like that people are like on the Discord. I feel like that these noobs that have no clue what's going in are coming in and trying to rearrange the room. And I had the Discord the way that I liked it, where we didn't talk about technical analysis, and I would prefer to keep it that way. You know? You can't be YouTube and not be a narcissist. Well, so to that point, if I'm not really that narcissistic by nature in that way, how did I end up on with a YouTube channel? Well, it was kind of an accident. I didn't think anybody would watch. So, well. You need to be in control. It's less about TA and more about people listening to you and admiring you. No. I mean, so... Hold on, why did the music go? What did I just play? That was weird. No, I don't think it's about people listening to me at all, because the whole thing is that we can't all trade the same way, for sure, right? But it does bother me when I see people wanting to utilize methods that I've put all of this effort into proving don't work, right? You know, I think the way that I feel is the same way that a person who has basically dedicated their entire life to studying rocket science and getting people on the moon, and then a couple of decades after they've done that, everybody comes out and says that it was a hoax. That's how I feel. Is like, I've done all the work, I've proven to you the reason why the market behaves the way that it is, and the reason why technical analysis strategies tend not to work, and everybody wants to use it anyways. I do feel like it is like that, though, that like if you still want to draw, if you've watched my channel and you still want to draw rectangles on a chart, then what is it that you're actually picking up from the channel? Because I feel like that you've missed like the key tenet, you know. No, but the whole point is, okay, so I understand that you're saying, well, I utilize this thing and I utilize this thing and I put them all together. But what I have been saying is this thing in particular is bad for you. This thing in particular doesn't work. Paying attention to it makes your trading worse, and you should ignore them. And like everything in the channel has kind of been centered around this whole thing of going back through and explaining why that's the case. Like, cause really, oh man, this is a disaster, this sim trade. I really tried to martingale it up, and I put 5 contracts on, and it just did not work out at all. Come on, flat. There we go. Like the whole thing is that the market itself doesn't really make sense, because from what everybody believes about the market, you should be able to just come in and use a moving average or a chart pattern or whatever the deal is, and everybody should be able to be successful traders based on the things that retail traders believe, right? And yet we know that that's not the case. How is it so hard? It makes no sense, right? Well, it does make sense. It's just it requires some really advanced math and understanding of things to understand where it comes to that point, right? But it can all be explained by, you know, in general terms, by this one simple thing. Orders have a really extreme impact on price. It doesn't take as many orders to move price up and down as retail traders think that it does. And so if a big guy comes in and needs to buy a certain amount of money, the amount of the thing that they have to buy is really going to move price, like really dramatically, right? So if I am a fund and I'm trading technical analysis strategies and I find one, a fund, if it's truly a successful strategy, they are going to completely remove it from the market. Like straight up, they're just going to completely remove it. And that's why technical analysis strategies tend not to work. And then on the same token, because those orders can have so much of an impact, it means that it's impossible for the markets to really stay at like fair value. So there's always going to be informational content out there that's not reflected in prices. And things that you can do that can, or that you can analyze that predict the future orders. All right. It's just that the stuff that you're going to get from the market that everybody else is looking at is never going to predict that very well, because the market is competitive. So anything that would predict that very well is already going to be arbitraged out of the market, right? So the things that you're going to have to rely on, you have to come from outside of the exchange, and there's going to have to be some reason as to why the market's not factoring it in. Like it came out at that time, but at that, you know, it was a piece of information that came out, but at the time they were more concerned about this, and the market was moving this way, and so that other thing didn't get reflected in the price. You know, it's things like that, right? Now everything makes perfect sense, right? And what does it suggest you should do? It suggests that you should divest yourself of all technical analysis. That's what it really says. Okay? You can watch volume. You can notice things. But once you start trying to apply technical analysis principles, which is to say, I saw a particular thing happen in the market and price move in a certain way, and I believe that that's going to predict the future price or volume. That's technical analysis. And anytime you do that, you're harming your own trading. technical analysis makes good sense if it's on volume and price and not everything else. Well, so I would say technical analysis on order flow is still technical analysis and is still useless. Okay, you can analyze order flow and it can be valuable to you, just don't do it with technical analysis. Which means that all you can do is say, this is the current state of the market. So if I know what the current state of the market is, then I can draw out scenarios. If buy orders come in, this is how that market's going to react. If sell orders come in, this is how that market's going to react. Maybe if they meet in the middle, right? So I can predict, if I know the current conditions, then I know how price is going to move when the orders come. But I still have to know that the orders come. So I can't come in and say that current conditions are going to predict that it's going to do X. I can't do that because all it does is like narrow it down to a few scenarios, right? Technical analysis is using past market generated information to predict future market. Sorry, let's not say market. I'm using where did the information originate? Okay. So technical analysis is using all of the information that is generated by the exchanges themselves and then using the patterns and information from that to try and predict the future. That's what technical analysis is. That's Seth's broad definition of technical analysis, right? So if you come in and say, I saw a large market buy order occur at this price within this, okay, so for instance, I'm trying to come up with I don't know which situation I would come in here. It doesn't matter. I saw a large market buy, ergo I want to buy. I saw a 1,000 lot buy. There was at 115.26 there was a 3,000 lot market buy. So because I saw that huge buy, I want to buy too. That is technical analysis, right? See, so here you're talking about supply and demand. I mean, supply and demand is what makes something move, but you can't come in and say, because last time it moved up to this price and then stopped here, that means that's where supply starts. Doesn't mean that at all. That's technical analysis, right? What's the difference between that and what I do? What I do is I say, this is the current market condition. They're stuck at 115.26 is what they were at earlier. Does that tell me what it's going to do afterwards? No, doesn't tell me a darn thing. If I know that buy orders are coming, if I know that somebody is, there's a block trading firm and they told me that they're going to buy in 10 minutes, because I know what the current market condition is, then I can tell you pretty accurately how it's going to play out. But I have to have that predictor piece, right? That's what makes it not technical analysis, because the piece of information that I'm using to predict the direction that it's going to go and to predict, roughly the timing of the orders and all of that is something that is not generated at the exchange. No, so auction market theory is okay. So we've talked about this before, but I want to make a video about this at some point. Okay. Auction market theory is one of the more interesting theories that have come out of the retail trading market, because it actually does seem to have an explanation as for why markets move, right? So auction market theory is basically the idea that the market is a two-way auction. So when you're in an auction, you know, people come in and they say, okay, you want, who's willing to pay 4,000, 4,001, 4,002, 4,000, and the auctioneer keeps going higher and higher and higher until they get to the highest price that people want to pay, and then they're done, right? That's auction market theory. And so the way that they explain the market is there's going to be an area of balance where a lot of volume is traded, and then there's going to be a measured move where somebody tries to move price a certain direction, and then price will auction up until all the buyers are all exhausted themselves, and then they will see if that if they create a new value area, they accept that new value of price, or if price reverts back down to where it comes from. That's auction market theory. Okay, so now we're going to poke all of the holes in it and show you why auction market theory is not actually an accurate. It's basically been disproven. Okay, so it's a theory that's useful, but it's a theory that's basically been disproven, right? So the first thing that we know is that the reason why these distributions in the volume profile occur is not because people view it as some sort of an area of value that, oh, this is a good price, I want to take it. If you think that it's fair valued, why would you trade there? That makes absolutely zero sense. So like the entire basis of this thing is like really questionable, right? The reality is what happens is that the market liquidity just gets strained in that area, and that makes it really difficult for them to get away from that area. So really what happens is people don't want to trade there, and by virtue of that, it gets stuck there. And then because it gets stuck there so long, more volume ends up trading there over time, and that's what makes it the point of control. So it's almost the opposite of what the auction theory kind of suggests causes these distributions in the profile, right? The second thing is that the market is not an auction. It's a limit order book, okay? People offer liquidity, and people can either choose to offer up their own liquidity and hope that they get filled, or they can be a liquidity taker. And that's really what it comes down to. So why does the market, you know, you'll get a trend and it will move up, and then maybe it comes back down, or maybe they accept that new price? What's really going on is a large meta order is being executed persistently over a long period of time that will overall have the tendency to move the market up. And then once they're complete, their meta order is filled, there will be a short-term regime change afterwards where they pull back a little bit, and then they'll start distributing around that area as all of the market makers reorganize their books, or like I forget what the correct word is. They equalize their books essentially, right? And so then that becomes that price. Now, right as that short-term regime change starts to take place, the market is vulnerable because the liquidity below you is still damaged. So if somebody with an opposing meta order then comes in at that point, it's going to push price further than the first one, right? So that's why you will so often see those measured moves come back. It's not because like value was rejected. It was that there's a savvy trader has been sitting there waiting and trying to take advantage of that situation to increase their impact, right? That's why the market moves the way that it does, right? So can you see how it's like auction theory was kind of like an interesting theory, and it was a useful theory, but that it doesn't actually really explain why markets move the way that they do. The stuff that we got from the order flow theory of markets and looking at the impact of large meta orders and all of that basically says to us that auction market theory is a bunch of hokey. Useful maybe, but ultimately wrong, right? Well, So what I'm doing again is I'm taking the information that I've learned both from books about the, empirical properties of markets and studies that I've read on my own, and I'm just applying it to us, right? That my unique contribution is applying it to us, because the people that did that research, their audience was the institutions, right? Their audience was the institutions, and so all of the things that they were learning were to things that the institutions, like if you're an institution and you execute those large meta orders, what does the in square root law of meta order impact matter? Yeah, it does. It's like the biggest thing that matters to the way that you trade, because no matter what, you're going to move the markets. So you want to reduce your impact as much as possible and utilize these properties of the order book so that you can execute more volume in that liquidity hole, essentially, right? So that was really useful to them. And what happened was everybody kind of assumed that it wasn't relevant to retail traders. They said, well, they're talking about large meta orders, so a retail trader can't take advantage of that. They ignored it. That's why this information is like available to us. It was like all out in the open, and everybody ignored it because they didn't see how it was relevant, right? And all I'm doing is I'm pointing out all of that information and explaining to you why it is relevant to you, right? For instance, what we know about order flow contradicts the auction market theory, right? So how can you utilize that? Well, if you start to see, like, here's a balance area, and you say, okay, here's balance, so that means that this is a good place to buy, and hopefully I get the measured move up here. No, doesn't mean that at all. It means that you probably shouldn't take that trade, because we're probably likely to just get stuck there, because people actually don't like that price. There's no reason for it to move. Like, I need to wait if I think there's a meta order out there, I wait for the next leg of the meta order, or I wait for a piece of news that will trigger other large orders or large groups of people to trade in the same direction and create an order for flow and balance. But otherwise, there's no reason to even touch it, right? So now I know a good spot to avoid the sort of thing that I should see when it is a good time to be trading. And what are the sorts of things that can move me? What do I actually need to look for? I need to actually look for a reason for somebody to be executing a large amount of orders, right? So I'm looking for a portfolio rebalancing or a really huge bet that they have to take off. Or I think that's part of what's happening today. Let's see here, we're back to 41. So basically the low end of the range, I see the average market maker buyer position at 115.19 is kind of there. So that doesn't tell us anything about what direction it's going to go, but it does kind of suggest that there were some winners and losers and that they're going to rebalance here. In other words, it's another area that I kind of avoid. Anyways, does that all make sense? Is that I'm not saying that you're stupid or anything. I'm saying my way of explaining things might be confusing to people. But that's what we know, and I'm just sharing with you what we know to be true based on very well established empirical data, and I'm just applying it to you. So theoretically, what does a golden opportunity trade look like for you? So a golden opportunity trade for me would be a situation where I have a piece of information that I believe will predict, will drive a lot of orders. That is to say, the specific piece of information that I know is going to directly induce people to trade. It's not like that's correlated with people to trade. I can explain how that info will force people to take trades. For instance, if the Federal Reserve came out and said, actually, we're thinking about reducing interest rates in February, right? If a Fed speaker came out and said that, what would happen? People would buy the treasuries. We know that would induce people to trade treasuries because their future expectations of what the Federal Reserve is going to do is changed. So they're going to come in and trade it, right? And if I can find a situation where I have that piece of information and I know that I have it before the rest of the market, that's when I want to trade, right? And there can be these situations where the information is out there and like the market hasn't started trading on it yet, but you know that there's going to be these people out there lurking and they're going to buy it up, right? Right. And then once I'm in the trade, I know based on the current liquidity conditions what I'm supposed to see, how it's supposed to move. Right? I should be able to come over here and see cumulative delta slowly rising. Which is why it's like doesn't really make sense to buy right now. Like look at this cumulative delta here in the 10-year. That's the 5-year, but look at the 10-year. Cumulative delta came all the way back. All the way back. Well, it's not insider information. Of course, trading on insider information is illegal. That's why I'm saying the theory has been that the market is a strong form, efficient market hypothesis. All information, including private and proprietary information, is currently reflected in stock prices. It's absolute nonsense. So as an example, I would point to the beginning of 2021. The Federal Reserve was telling us that they were going to raise interest rates. We all knew that it was going to happen, and the market had not priced it in at all. And we knew that inflation was rising. And you literally could have just gone short the treasury at the beginning of the year and held it all year and made a bundle, right? And why didn't people do that? The Fed told us that it was going to happen. Like we knew it. There was a situation where we knew, like you could literally know, like almost with certainty, what the future orders were going to be, and yet it wasn't priced into markets properly. Why? Well, because it kind of happened during the holidays and people didn't believe them, and you know, this sort of thing. Easy trade. But you'd think that it's like, oh, you can't get it, but I'm telling you, it happens all the effing time. What about the fact that just because you know what's going to happen doesn't mean you know when it's going to happen? Sure. So there's still a high degree of uncertainty about things, right? Even if you have really good information. One of the key things that you should keep in mind, though, and that help a lot, is that there is an ebb and flow created by both, you know, the timings of the different exchanges and when they open up and everything, and when certain pieces of information like economic news come out, and then an ebb and flow on how long it takes liquidity to recover, right? So on most normal days, what you're going to see happen is a move up on the economic news or whatever the deal is, and then 30 to 45 minutes of quiet, and then another move, right? And so you can kind of time those and say, okay, here's the time period that I'm expecting to see it. I want to see a little bit of an imbalance in market buy orders, and if I see that, then I'm going to jump on it, right? Anyways, I've got to get going now, guys. I got on like a whole other rant, and I was supposed to finish it there, and I went over a little bit. So I will see you guys tomorrow, Thursday. In the meantime, stay excellent.